Hello friends, I am Paramananda Sir, Assistant Professor, Department of Commerce, Government First Grade College, Haryana. Today I am going to discuss with you very important and fantastic topic in financial markets and institutions. So that is major development financial institutions, first of India, that is IFCI. Then we will see SIDBI and IDFC. Let us start with IFCI. History of IFCI. IFCI Limited was set up in 1948 as an Industrial Finance Corporation of India, a statutory corporation through the Industrial Finance Corporations of India Act 1948 of Parliament to provide medium and long-term finance to industry. For the purpose of providing medium and long-term finance, the IFCI was established according to IFCI Act 1948. After repeal of this act in 1993, IFCI became a public limited company registered under the Companies Act 1956. IFCI became a government controlled company subsequent to enhancement of equity shareholding to 55.53 by the Government of India on December 21, 2012. In April 2015, Government of India has acquired 6 crore preference shares of IFCI Limited of rupees 10 each from 6 public sector banks. With this, the shareholding of the Government of India in paid up share capital of IFCI has been increased to 51.04% and IFCI has become the government company under the section 2 of 45 of the Companies Act 2013. IFCI is also a systematically important non-deposit taking non-banking finance company, that is NBFC and SI, registered with the Reserve Bank of India. The primary business of IFCI is to provide medium and long-term financial assistance to the manufacturing, services and infrastructure sectors. Through its subsidiary and associate organizations, IFCI has diversified into a range of other businesses including broking, venture capital, financial advisory, depository services, factoring, etc. As part of its development mandate, IFCI was one of the promoters of National Stock Exchange, Stock Holding Corporations of India Limited, technically consultancy organizations and social sector institutions like Rashtriya Gramina Vikas Nidhi, RGVA, Management Development Institution, that is MDI, and Institute of Leadership Development, that is ILD. The Government of India, as per the budget for financial year 2014-15, has mandated IFCI for setting up of a venture capital fund under social sector initiatives with an aim to promote entrepreneurship among the scheduled caste and to provide concessional finance to them. The fund has been put in place after getting approval of SEBI under AIF regulation 2012 with contribution of rupees 200 crore from Government of India. IFCI has committed rupees 50 crore as lead investor and sponsor of the fund. IFCI subsidiary IFCI Venture Capital Funds Limited is the investment manager of the fund. Government of India has also provided rupees 200 crore to IFCI Limited in March 2015 under the scheme of Credit Enhancement Guarantee for Scheduled Caste entrepreneurs for providing guarantee to banks against loans to young people and startup entrepreneurs belongs to scheduled caste with an objective to encourage entrepreneurship in lower strata of the society. Then if we see the functions of IFCI, first the main function of IFCI is to provide medium and long term loans and advances to industrial and manufacturing concerns. It looks into few factors before granting any loans. The study importance of the industry in our national economy, the overall cost of the project, and finally the quality of the product and the management of the company. If the above factors have satisfactory results, the IFCI will grant the loan. The Industrial Finance Corporations of India can also subscribe to the debentures that these companies issue in the market. The IFCI also provides guarantees to the loans taken by the such industrial companies. When company is issuing shares or debentures, the Industrial Finance Corporations of India can choose to underwrite such securities. It also guarantees deferred payments in case of loans taken from foreign banks in foreign currency. There is a special department, the Merchant Banking and Allied Services Department. They look after matters such as capital restructuring, mergers, amalgamations, loan syndications, etc. At the process of promoting industrialization, the Industrial Finance Corporations of India has also promoted three subsidiaries of its own, namely IFCI Financial Services Limited, IFCI Insurance Services Limited, and IPIN. It looks after the functioning and regulation of these three companies. In the last few decades, the IFCI has made a significant contribution to the development of our economy. Also, it is responsible for the growth, expansion, and modernization of our industrial sector also. The Industrial Finance Corporations of India has also been beneficial for the import and export industry. The cause of pollution control, energy conservation, import substitution, and many such initiatives and industries, some sectors in particular have seen a lot of benefit. Then we will move to Small Industrial Development Bank of India, that is called as SIDBI. Small Industrial Development Bank of India is a development financial institution in India, headquartered at Lucknow and having its offices all over the country. Its purpose is to provide refinance facilities and short-term lending to industries and service as the principal financial institution in the micro, small and medium enterprises, that we can say that MSME sector. SIDBI also coordinates the functions of institutions engaged in similar activities. It was established on April 2nd, 1990 through an act of parliament. It is headquartered in Lucknow. SIDBI operates under the Department of Financial Services, that is Government of India. SIDBI is one of the four all India financial institutions regulated and supervised by the Reserve Bank of India. Other three are Exim Bank, NABARD and NHB. But recently NHB is in government control by taking more than 51% stake. They play a statutory role in the financial markets through credit extension and refinancing operations activities and cater to the long-term finance needs of the industrial sector. SIDBI is active in the development of microfinance institutions through SIDBI Foundation for Microcredit and assists in existing microfinance through the microfinance institution route. Its promotion and development program focuses on rural enterprises, promotion and entrepreneurial development. In order to increase and support money supply to the MSC sector, it operates a refinance program known as Institutional Finance Program. Under this program, SIDBI extends term loans, assistance to banks, small finance banks, and non-banking financial companies. Besides refinance operations, SIDBI also lends directly to MSMEs. Then we will move to functions of the SIDBI. As part of non-financial intervention in the MSME sector, SIDBI had also undertaken various measures in the past. Recently, in association with credit rating agency, that is CRISIL, and credit information company TransUnion CIBIL, it has launched or it has introduced CrisidEx and MSME Pulse. CrisidEx, India's first sentiment index for micro and small enterprises. that is MSEs, has been developed jointly by CRISIL and SIDBI. It is a composite index based on diffusion index of 8 parameters and measures of MSE business sentiment on a scale of 0, that is extremely negative, to 200, extremely positive. SIDBI, in association with TransUnion, CIBIL launched MSME Pulse, and Microfinance Pulse launched by the Equifax, a quarterly report on MSME credit activity for closely tracking and monitoring MSME segment in the country. SIDBI has launched the Udyami Mitra Portal to improve accessibility of credit and handholding services to MSMEs. They can select and apply for preferred banks through this portal. Under the portal, entrepreneurs can apply for loan without physically visiting and bank branches, any bank branches, and can they can select from over 1 lakh bank branches, track their applications status, and avail multiple loan benefits. Now we will see the functions of the SIDBI. As part of non-financial intervention in the MSME sector, SIDBI had also undertaken various measures in the past recently in association with credit rating agency CRISIL and credit information company, that is TransUnion. CIBIL, it has introduced CrisidEx and MSME Pulse. CrisidEx, India's first sentiment index for micro and small enterprises. It has been developed jointly by CRISIL and SIDBI. It is a composite index based on a diffusion index of 8 parameters and measures of MSE business sentiment on a scale of 0, that is extremely negative, to 200, that is extremely positive. SIDBI, in association with TransUnion CIBIL, launched MSME Pulse, and Microfinance Pulse launched by Equifax, a quarterly report on MSME credit activity for closely tracking and monitoring the MSME segment in the country. Then SIDBI has launched the Udyami Mitra Portal to improve accessibility of the credit and handholding services to MSMEs. They can select and apply for preferred banks through this portal. Under the portal, entrepreneurs can apply for loan without physical visiting any bank branches and can select from over 1 lakh bank branches, track their application status, and avail multiple loan benefits. It also has facility for uploading all necessary documents through the portal. The MSME can also seek handholding support for getting finance. SIDBI has also entered into an arrangement with CSE e-governance services, that is CSE e-governance service, to take Udyami Mitra Portal to the unserved and the undeserved MSMEs. CEGS is a special purpose vehicle, that is SPV, set up by Ministry of Electronics and IT, which acts as a connect point for various digitally aligned services to village in the country. SIDBI Venture Capital Limited, that is SVCL, for providing venture capital assistance to MSMEs. Micro Units Development and Refinance Agency, that is Mudra, for funding the unfunded micro enterprises in the country. Receivable Exchanges of India Limited, that is RXIL, to enable faster realization of receivables by MSMEs. SMERA Ratings Limited, that is SMERA, for credit rating of MSMEs, renamed as Acute Ratings and Research Limited. India SME Technology Services Limited, ISTSL, for technology advisory and consultancy services, and India SME Asset Reconstruction Company Limited, that is ISARC, for speedier resolution of non-performing assets in the MSME sector. SIDBI supports the Government of India in its initiatives and works as a nodal agency for some of the schemes related to development of MSMEs such as Make in India and Startup India. Then we will see the Infrastructure Development Finance Company, that is IDFC. Infrastructure Development Finance Company Limited, more commonly known as IDFC, is a finance company based in India. It provides finance and advisory services for infrastructure projects as well as asset management services and investment banking services. IDFC was incorporated on 30th January 1997 with its registered office in Chennai and started operations on 9th June 1997. In the August 2005, the company's equity shares were listed at the NSE and BSE after an initial public offering. In May 2008, the company entered into asset management by acquiring the AMC business of Standard Chartered Bank in India, namely Standard Chartered Asset Management Company Private Limited and Standard Chartered Trustee Company Private Limited. The acquired companies was rebranded as IDFC Asset Management Company Private Limited and IDFC AMC Trustee Company Private Limited respectively. In 2008 and 9, the company subscribed in 2008-9, the company subscribed 100% of equity shares of IDFC Capital Pte Limited, that is Singapore-based company. During the year, the company established IDFC Foundation to focus on capacity building, policy advisory, and sustainability initiatives. IDFC Bank started operating banking services on 1st October 2015. Then if we see the functions of IDFC, uh, in all the types of companies, all types of industries, infrastructure is very important element. For that reason, IDFC functions in all the types of industries. For example, development of energy sector, development of food and agriculture infrastructure, development of transportation, development of telecommunication and IT infrastructure, management of environment, development of tourism, development of allocation, development of health, etc. In all the sectors, in all types of industries,